All right. Hello everyone. Welcome to the channel. Welcome to something great here, something we're creating here. So this is your JFX trading group where we trade like market makers, like the market makers trade with the big banks. Okay, so here I'm going to quickly go through GBP USD, a pair that I was just looking at last week, and Uh, this is one of my favorite pairs, GBP USD, and some other pairs that I trade out there. So last week I was looking at GBP USD predominantly, and I was focusing on sales. So I was waiting for sales, right? I was looking for sell setups last week. So what the way we trade is I look at the weekly cycle, how the market or how price play around with the weekly cycle, right? I'm pretty sure if you went through some trading psychology books or if you went through some courses, they will maybe teach you if they know about the market makers or if they know about the big guys, they will teach you maybe about the weekly cycle, how the week goes by, and how big guys trade and where they look at for the real moves, right? So what the market makers normally do is, before I get into what I'm going to talk about, so what market makers do is uh, they give you this excitement that this is the real direction for the week, right? So they give you the excitement that this is the real direction for the week. So everyone get excited, seeing momentum to the upside, and people are buying to the upside and beginning of the week, which is on Monday. So what I normally do is I look at certain key points or certain key areas. I look at something we call the psychological support and resistance. So what it does is we look at we have different sessions out there. We have the Asian session, we have the London session, and we have the New York session, right? Uh, Obviously, we have more sessions. Many people talk about the Frankfurt, all those kind of things, but I don't really focus on those. I focus on these three sessions, right? So what I normally look at is I look at the first agent session of the week. So when you're looking at the first agent session of the week, you're looking at the first 8 candles on the 1 hour time frame, and you're looking at the first 2 candles on the 4 hour time frame. So you're looking at the first 2 candles of the week. So let's take a look at those first 2 candles of the week, what I did last week, right? So what I'll do is I'll simply go through what I'll do is I'll do this and then I'll go to the first 2 candles of the week where they are right here. So what I do is I draw what I call the psychological support and resistance for the week, and I look at how these guys play around these two lines here that you see. So what they did here, what I was looking at some equal highs here, some, let me say, some area of resistance that many people will be looking at. So I was looking at this area here is my area of sales, right? So what I wanted them to do is I wanted these market makers, look, we have 1, 2, 3, 4, 5 piece to the high, and this becomes a strong resistance area. So everyone, right, is looking forward to sell as soon as the market makers get there. And guess those who sold here where their stop losses are right there. So what I wanted the market makers to do is to give me sort of a trip move, maybe a spike or a roll track, or maybe sort of a trip above, at least slightly above this equal highs, and then they'll drop. So what I was looking at, like, okay, let me just look at the weekly cycle, which is what I do every week. I look at the weekly cycle, look at what I expect to see that week, and something like that. So I normally use Monday to look at what's going to happen that week. For example, if you look at this area, you'll see the first 2 candles, right? What the market makers do, they make a fake move to the upside, week beginning, and then they real move for the rest of the week. So everyone who was thinking of buying up to I don't know, maybe AB goes to CD, I don't know what they trade out there, buy, looking at more buys to the upside, they got trapped up here, and then the market makers reversed. So they normally have this unidirectional move uh, that goes on for about the rest of the week, almost from Tuesday to Friday, just in one direction. But what they before they do that, they have to make sure that you go in the wrong direction before they put you in the before they go in the right direction, right? So look at this candle, how big it is. It's so inducive that everyone is thinking long, right? Now, this is the beginning of the week. Remember, these are period separators, right, for the week. So this is a single week. This is a single week. This is a single week. So if you look at it right here, you see that here they made a fake move week beginning, probably on Monday, right? Now, what they normally do is high of the week, right, is normally formed either on Monday or on Tuesday. Then the low of the week is formed either on Thursday or on Friday. Of course, we have some other things called, for example, we do reversals where they can reverse on Wednesdays or they can reverse either way. But Thursday or Friday is where you'll be looking forward to a reversal of the low of the week back into the range to finish off the week, trapping people down here. So what they do here is I was okay. So what we do is I look at the first two candles, right? You draw a line that goes through, and then you go to I just want it to be visible on these time frames only. So what I do is I, instead of just playing around with this line trying to make it straight, I just come to parameters and just make sure these two values are matching, right? So are the same numbers, right? So now they're matching, and the comma I just like the line to be a little black, and the thickness I want it to be the second part, right? So I just copy this one here and then I put it here. So when you look at the first two candles of the week or the first 8 hours of the week, you're looking at what these guys do within those values, right? Within those areas. Obviously, this was a gap in the market. They had to feel something here to get to a certain support area, maybe to go higher or go lower, right? So now I'll not focus on which direction they went through or what they did. I'll just look at the weekly cycle, what I was looking at last week, where I got it and why I got in there. And at the end of this video, I'll post some flashcards or some before and after, and maybe some chart markups that I had on H1 and the flashcard that I made for M15, or the setups that I took for M15, and then you'll see where I took it and why I took it there. I'll explain it right here, and at the end I'll just show you, okay guys, this is the video, the flashcard. You'll see it at the end. Right, so let's go to H1. Right, so this area here is the psychological resistance. Right, I'll just call it PR, for example, PR, and then I'll just call the one below PS. Right, so this is PS, this is PR. So what they do is this was what I call PRM, psychological resistance manipulation. Right, so in this case, what they do is they manipulate the psychological resistance, because for looking back, right, you see that people are actually buying here. I will not talk more about why they went up, because here they were completing a weekly cycle, right, trading levels and stuff like that. So they were completing a cycle. But let's focus on this week alone. So this was the fake move week beginning. And remember, the high of the week is formed either on Monday or on Tuesday. Now, everyone who saw this as who knew that they were going to go down, and then they saw here, guess where their stop losses are, right? They're here. So we have this guy here, which represents the yesterday's high. So what you normally do on Tuesdays, you're waiting for them to manipulate that area to give you the high of the week. So this is the high of the week. So what you do is you trade away from it for the next 2 to 3 days. All right, 2 to 3 days. So if I'm to draw my levels, I'll be like, okay, what do we have here? We have the high of the week right here, and then we have day one drop, which was the first day of drop. Remember, you trade away from it for 2 to 5 days or for 3 to 5 days, right? For the rest of the week. And then this was my level one, and then this was my level two. So I'm looking at levels of consolidation or levels of accumulation where they spend much of that time on. So right. So I was looking at this, I was like, okay, so they've traded away from the high of the week, right? And on Wednesday, I was looking for sales. I remember I did take a sell here, and then I got out when I saw them doing some kind of shit. So I'll show you where I took the sell. I normally take my entries on M15. I look on H1 for directional bias, and H4 for directional bias, and what they're doing for the week. So what I'm looking at here is I took a sell here, and then I got out, and they took some of them out at break even, right? And then on Thursday, I was still looking for sales. Why? Right? Because we're trading away from the high of the week. And I do know that the reversal is meant to happen at the end of the week, towards the end of the week. So I was looking at this M pattern here. Beautiful, right? Close above, close back below, and then close back above, and then my end was right here. So I was looking at, okay, for example, before I go any further, you can also look at this as a divergence, right? a regular bearish divergence. So in that case, you'll be looking for shorts. So I was trading away from this area for 3 to 5 days. So now what do we have? We have day one, we have day two, and now we need day three to finish off the week, right? To finish off the cycle so the cycle can be complete. So what I'm expecting next week is I'm expecting this to complete the cycle as a fake move week beginning as well, and then maybe reverse to give us some buy setups by Monday or by Tuesday, but mainly by Tuesday. So by Tuesday they'll give us maybe buy setups and then go higher. We'll have to wait and see what they'll do like on Tuesday. But if you check H4, you might want them to go a little bit lower, right? Lower to take out some equal lows here. See these two lows here, they're really relatively equal lows. So maybe you might want them to take out those equal lows before they rise. But what I want them to do is I want to see a fake move at the beginning and then we rise, right? Or maybe go higher, or maybe just reverse again and then go down. It depends on what they want to do, right? So now um, so looking at the weekly cycle, you see that this is day one, day two, then day three. So you can see 1, 2, 3 is the high becomes the strong resistance area, and it's bouncing off this EMA here that you can see here, which is the 50 EMA, right? So it's bouncing off the 50 EMA to go down, right? And this is the first pullback to the 50 EMA. I'll not really go into detail on what it is or what it does or how it works. I'll just explain how I trade and where I take my entries, all right? So going to M15, looking at what they did for the week, I would just zoom out a little, right? Zoom out a little and just show you what they did for the week. So looking at this, you see that this was the fake move we begin, right? You see that this was like a peak, like a reset. So 1, 2, 3, 3 days in a row. So there are 3 days, they reverse, the drop again, and the next 3 days, right? So here I'm expecting this as a peak, which is the high of the week, trading away from the high of the week, and this happens to be the low of the week, baked into the range. Why? Because they want to trap everyone who was chasing this trend. The downside is trapped down here, and everyone who thought of, I don't know, keep buying here, they're trapped up here. So on Monday they'll just open it with a gap to the downside, or maybe it's a small stop out and then a straight away drop to take out this low or even go lower, but to meet the A data value that we need to be met, right, for the complete cycle. So here's the thing. On Monday, I didn't do anything. On Monday, I was just watching. It just went higher, didn't give anything. And then on Tuesday, I remember I took a sell somewhere here, and then I got out on a scratch out here, and then I just let them go. And on Tuesday, let me just draw something here pretty quick. So on Tuesday, I was looking at on Wednesday I was looking for sales. On Wednesday, so I was looking for sales. So on Wednesday I was looking for sales. Which one should I take here? I'll take this one and see how it plays out. And then visualization on F15. Okay, so let me see here. All right. Okay, so I was looking at it. I was like, okay, on Wednesday, I was like, okay, this is a nice setup, right? I was looking at this. I was like, this is a stop handle high, and then they gave me this. It's a nice M with 2 name group patterns. I took it right here, and then they started playing games, and then I got up, and then I waited for it close below everything. I took again right here on H1, by the way, and then they dropped. I got my 30 pips and I was out, right? And then on Wednesday, on Thursday, they came back again, right? And I know I'm still looking for sales because this is not a day of drop, right? They dropped and then they came back into this range. So I don't count this as a day of drop. I count this as a day of drop because they didn't come back to this range. So this is a day of drop, but here I was counting as a day of drop, but they came back again for more because they wanted to just get everyone who thought they got sales here. So now let's look at it again this way, right? So looking at it this way, you're looking at, right, let me just drop a little bit. Okay, so here this box is called the Asian box, by the way. I'm just looking at the Asian timings and everything like that Asian box. So looking at it, I'm like, okay, fine, right? They came back here right? Close below and close. This is a nice M pattern. You can see there's a new day, a nice M pattern. So I waited for a candle close below all the EMAs. Why do I do that? Because these guys, they are moving support and resistances, right? So if you just take a sell right here, what if they bounce and then go higher? So I normally wait for them to give me a close below, unless if it's a clear trade like like this one, for example. We hit a nameable pattern and then that was okay, evening start, right? But here it's just ugly. So I just need to wait for a shift candle and then I'll take my trade right here. So I really took my trade right here on the shift bar and then the market just dropped pretty nicely. And on Friday, I didn't really take any trade. I was just doing other things. I didn't take any trade on Friday. But what I was expecting on Friday was I was expecting uh, stop on high, hold this EMA here, which is the 200 EMA, right? I was looking for it as my resistance area, right? So I was looking for a stop on high in 3 swipes to the high, and then I was looking for to sell like here, right? So they gave one and two, right? So it's like 1, 2, 3, 4, 5 keys to the mayor, right? So this was nice, and then they dropped. So I was looking at this maybe as the shift bar, but I was not trading on Friday. I just looked at the after effect where I would have taken my trade was here to the downside, but they didn't really go anyway, right? But looking at H1, it's something that is pretty nice. Like I'm still looking forward to seeing more sales to the downside. Maybe something like take out this high and then just drop. That's what I'm looking at, right? To meet the ADR value. So here is what I did. I think you saw I took my sales here and how I took them, right? So this is what I did on GU last week. So I look at the fake move will begin, what they do, right? So when I look at GU, I don't just look at GU alone. I look at EG as my correlation, as my pair, as my other pair, like for correlation to see what's going on with EG, what they are doing and stuff like that. So looking at EG, I was looking for buys, and on G, I was looking for sells. So this is what I normally do: wait for fake move at beginning, and then trade away from the high of the week for 3 to 5 days, right? Or for the rest of the week. Same applies with this one. They might give us a fake move. They will have to drop more, by the way. They have to drop more, right, to give us the last. So this was day one, this was day two. So we need day three to the downside before we reverse back to the upside, right? So that's what I'm looking at. And I want this guy here, the market best client, to be oversold before we go any further. All right. So this is what I did last week on GU. I was also looking at a certain resistance level here on daily, but I was not really focusing on it's the same resistance level. I rarely look at daily that much unless if I want to just count levels maybe, or I want to just look at institutional levels to see what these guys are doing, or to just look at what the market makers are doing, or what the retail traders are doing, what they're thinking and stuff like that. I like using the 4-hour time frame to see what these guys are doing on the 4-hour in terms of the weekly cycles, right? We can go on and on and on. You can see what they do week in, week out, right? Fake move with beginning and the real move for the rest of the week, right? You can see here, fake move with beginning and then the real move for the rest of the week. Right here, it was kind of different. Why? Because here they were completing a cycle, right? And then they started going higher. So there are different variations on theme to what they do weekly and what they do on a monthly basis, or what they do every week. So, for example, if I'm looking at this as last week high, I would I would know that they trapped some volume here. Why? Because there are buyers who are trapped. There are people who put their stop loss again here once they sell. Because this, trust me, this is an engulfing candle. So every person is like, oh, engulfing candle, let's sell. And the stop losses are here. So they're expecting G to drop and drop and drop and drop. But the thing is, when it comes back, all traders, we have pride. We have this thing that it's supposed to go my way, but it's not the way it's supposed to be. You have to just, follow your plan, your trading plan, and then let the market do its job. And you don't have to be greedy. So there are things that you have to, to focus on when you're doing forex. You have to focus on the psychology. You have to focus on the risk management, which is the most important thing, risk management, right? And you also have to focus on the technical analysis. Of course, some people out there tell you about the fundamentals and stuff like that. Trust me, it's also good, but I normally focus on these three pillars, right? If you read the book called Trading for a Living, you will understand what these three pillars of success are: the risk management, the psychology, and of trading, and the technical analysis. So once you understand that, okay, the half the week is formed, every Monday or maybe Tuesday, and then the low of the week is formed Thursday, and then or Friday, and then this size the reverse, right? I want you to do this, right? You go and look at the the biggest move in the market every week. It's always in one direction. So this was a fake move, big move, right? Fake move, big move. We can go on and look for perfect weekly cycles, which is what you can also do. Not just look at the weekly cycle, what they do, you look at the levels and stuff like that, right? So at the end of this video, I'll just show you some flashcards of the trades I took last week. I'll not really put reasons why I took the trade. I'll just put some flashcards, and you can see the before and the after effect, what I did and what I was looking at, the cycle that I was looking at. So I'll put a picture of the cycle, what I was expecting, and at the end, I'll just put the flashcards, right, to show you the before and the after. Before, I mean, when I took the trade and after I was out of the trade. All right. And for example, here, I took a picture of this and I was like, this is day one drop. So I'm expecting day two drop and then day three drop. So see, I'm still bearish here for your information. The next day of drop here is supposed to happen either Monday or Tuesday. It depends on what they want to do. They might make a fake move to the upside and then drop on Tuesday and then Wednesday. But what I'm expecting is I'm expecting a move to the downside and then as a fake move completing this cycle to the downside and then go up from there. All right. That's what I'm actually expecting. All right, so this is it for the day. I want to keep it very short and brief. That's why I was trying to not to rush a lot of things just to explain how I see the trades and stuff like that. For example, on this guy here, I was also seeing more upside. Right, I was seeing upside moves, but they just did what they do. Fake move with beginning as well. You can see it, right? Fake move with beginning, and then they move for the rest 1, 2, 3 days. Right, and you can go on and on and on and on and look at other pairs how they do it with USD, look at other pairs and see how they do it and stuff like that. That's it. That's all, guys, for today. See you next time. I'll try to post some weekly analysis how I take trades, and as time goes on, maybe who knows, I'll start showing you guys what I see on a weekly basis, what I think will happen, and stuff like that. And for those who are really interested in knowing more, you can just join our free Telegram group. I'll put the link for that group so you can just go there and join and see how other guys are doing it there and how we do it on a daily basis. It's not, it costs you nothing, just joining and see how we do it every week and see how people do things there, and that's it. So see you guys. Enjoy.